And the stock on his radar today is very interesting, a company which manufactures shrimp feed. And the stock has been trading higher by over 190%. Nigel, the only company that I know that manufactures shrimp feed is Avanti Feeds, which has had a great run. But now you've identified another one.
That's right, Sonia. And Avanti Seeds is far bigger, in comparison to the stock that I'm going to talk about. The stock that we're talking about is Waterbase. By the way, even Avanti Feeds will be increasing their capacity, but even this one is increasing capacity. So let's focus on it. Yes, as you said, Sonia, it does focus on manufacturing of shrimp, and it's been a big mover if you take a look at it. Just in the last 1 year, in the last couple of months, if you just pull up the stock movement, you'll see that in fact the stock is higher by more than 1,000%. It was only around $10 in January 2014, and it's moved close to around 230% since December 2014 itself. In the past 1 month, the stock has done a good half century. That's more than a 50% move. The shareholding pattern, nothing really great. Promoters holding roughly around 50-52% stake, and no institutional holding, or very minimal institutional holding is what we have. Taking a look at the first quarter numbers, it looked quite good. The revenue came in higher, the margins were maintained at around the 12% roughly, and profitability as well increased marginally. But what really impressed me is what they have been doing over the last few years. So I think we should get up a few charts for you on the screen. Take a look at the revenue numbers from 50 crores to around 270 crores. Let's pull up the next chart as well that we'll have. I think it should be the ROC. That is very, very impressive. ROC is moving from around 4.5% all the way to around 30%. Now that's something that really a lot of people look at, and that's a key indicator that the stock, the management has been taking key interest in the business. The debt to equity ratio as well has been improving. So all those three charts tell you that there is some confidence in this particular counter given by what they've been doing over the last 4 to around 5 years. But let's move on. There's a big merger that they're taking place, and they're going to be merging the company with another company. That's PFL. That's part of the same group companies. And I'll tell you what, they were expanding capacity a few years ago, but they couldn't do it by the listed entity because the company was in some crisis in the mid 2000 to around 2010. So that's why they started this new company, and now they'll be merging this company with the listed entity, that is Waterbase. The capacity will move to around 1,10,000 from currently around 35,000 odd, and no big dilution there. It's going to be moving from around 3.9 crore shares to around 4.1 crore shares. So not really a big dilution there. And in fact, the valuations as well is fairly attractive. So they are tripling their capacity, and valuations as well attractive over there. You take a look at the debt in the books of the entity that's going to be merged in PFL. It's only around 45 crores roughly, and the listed entity has no debt whatsoever. Positives then going ahead. They're going to be tripling that capacity. Definitely a positive. Minimum debt, always a good sign if you have a management, have a company like that. And you take a look at it, the dealers as well, from around 100 dealers, they're going to be looking to push it up to around 130 dealers. This I've got from the company's presentation. They're looking to offer some value-added products as well going ahead. And they're planning a revival of exports. So maybe it could be around 150 crores in the next couple of years. That's exports of shrimps. Margins not too great on that one, though around 5 to 6% as per what feedback I have got. In terms of negatives, you're talking, Sonia, about Avanti. They are hiking their capacity by close to around 25%, while that could give rise to some overcapacity in the system. Working capital as well. Currently, no problems, but going ahead, that could be a bit of a problem. And they're looking to give value-added products. Currently, they're into shrimp feed. If they start selling shrimps, then the margins, I'm told, get diluted. So going ahead as well, maybe top-line growth, margin expansion is something that we'll have to look forward to, or compression, in fact. And also, there are a lot of seaborne diseases. If that comes in the way, then the business gets into a bit of a tizzy. But nonetheless, watch out for this stock going ahead.
All right, Nigel, thanks a lot for that.